Curious if the housing market is going to continue to gain momentum through the end of the year. Worried about what might happen with the election, or are we going to have a wave of foreclosures that are going to bring prices down? We've got a lot to unpack. Hi, I'm Nick with the Iannitti Realty Group. Just wanted to come at you with a real quick housing update for last month here in San Diego. But I just want to, as always, get to a couple of different things here happening in the nation so we can understand a little bit better the ramifications of what's going on. I showed you guys here in last month's slide when we look at showing traffic. This is basically buyers coming out looking at properties according to showing time. We definitely see an increase, especially over the beginning of the year. A lot of this is seasonality, as we know, but still very strong buyer demand. When we look at our purchase applications, this is a week over week. Typically, I show you guys year over year, and I'm going to show you that in 1 second. But what I want you to see is when you look at this week over week, obviously we saw here during the pandemic, obviously nothing was going on. And then we bounced back with a huge amount of pent up demand. And now that we see things, they're looking to kind of peter out a little bit, right? This could just be a little bit of seasonality. It could also be that a lot of buyers that are in the market realize that they were going to have to get their finances in order. So they may have already done that in place. But when we look at the same purchase applications on a year over year difference, we're looking at an increase right now, just this past month of 25% over where we were a year ago. So that's definitely good news. Still real strong buyer demand. When we look at the percentage of changes in deals that are actually going into escrow, when we look at a week over week difference, again, we start to see a little bit of seasonality here. But again, when we look at year over year difference, we're still 16% above where we were last year. That's huge, okay? And when we look at buyer traffic, again, these are people coming out looking at properties, again, according to showing time. We're up 60% year over year. I don't think anybody anticipated that when we hit the pandemic. Again, our total inventory was down 38%. This is nationwide. We're still hovering nationwide around 3% months worth of inventory, which is still very much a seller's market. When we look at our projections for the future home prices, everybody now is pretty much projecting that we're going to have around a 3% increase when you look at it on average from all these different sources here. But what I want you to, I thought this was interesting taking a look at this, as far as the major adjustments since the beginning of the pandemic. Fannie Mae said we were going to have a 0.4 increase in pricing. Now they're saying 4.4, right? Zillow thought that we would lose 3% in home values. They're now up 3.6. CoreLogic down over 6%. They're now on the positive side. So it's really interesting what's been going on now that we know a little bit more as we're coming through the pandemic. And what we've seen time and time again is that the housing market remains really incredibly solid. And it really is one of the underlying pillars that's keeping the fundamentals of our overall economy strong. Why we're seeing things in our markets, in the stock market, things like that, continuing to increase despite the fact that we have these unusual levels of unemployment due to the health crisis. So also I've heard a lot of talk lately, as soon as the moratorium is lifted on foreclosures, we're going to see a wave of foreclosures. Look, I'm here to tell you that this is probably just not the case. When we look at the number of forbearances, they're already leveling off. At the height, we had about 4.76, 4.9 million. A significant portion of those were never even actually utilized. People got a forbearance in a preemptive kind of way to make sure that they had it there if they needed it, but many of them never needed it, right? And now we're seeing this actually kind of normalize to where we're, our regular normal rates. So what we're talking about really is, instead of seeing this flood of foreclosures, we're probably going to see a trickle. Okay, remember, I've said this in other videos that over 60% of all homes in the United States, have more than 60% equity in them, right? 40% of all homes are outright owned free and clear with no mortgage. Those people, if they're in trouble, they're not going to let the home go to foreclosure. They're just going to basically put it on our current market right now, which has huge buyer demand and very low levels of inventory, very much a seller's market, and they're going to wind up getting top dollar for the home. So I don't think we're going to see a huge flood in foreclosures. Another thing too is when you look at just the percentage of stressed properties that we're looking at, we're less than 1%. In other words, we're about half of our regular average of distressed sales of foreclosures and things like that. So even if some people are calling for the number of foreclosures to double, right, that may be true. We probably will see an increase in foreclosures just due to our unemployment levels. But even if the numbers doubled, that would still bring us back to the regular average that we normally see year over year. So again, I don't think there's going to be this huge. I have some clients that are telling me we're waiting for this foreclosure wave and we're going to scoop in and get a great deal. That's probably not too likely. So anyway, just realize with the interest rates where they're at, buyers right now from especially about 2 years ago, they can afford 10% more home and still keep their monthly mortgage the same with these incredibly low rates. So that is definitely driving up our housing affordability index. If you look at this, remember, the higher the number, the more affordable things are. This is basically directly due to the interest rates, not necessarily the rising home prices, obviously. But we know that we are still going to continue to see a lot of strength, just basically due to the low levels of inventory, high buyer demand due to low interest rates. Okay, we're also starting to see some patterns of people moving around, just due to COVID and being able to work remotely, getting out of urban areas and things like that. I thought this was interesting. Yun forecasted. Yun is he's the chief economist for the National Association of Realtors, basically said the existing home sales are projected to be about 1.1% over where we were in 2019. I think when the pandemic hit in March, no one thought by the time we got to the end of the year that our home sales would actually beat 2019, but that probably is the case. And then, going into next year, we're looking at a huge gain. So it'll be interesting to see what's happening. But right here in San Diego, what we're looking at here, these months are for, all these numbers are for the month of August. They're all median numbers, all housing types, all over the entire county. Our median sales price was up 11.5% to 646,500. That's good news. Our active market time down to 8 days. That's almost a 53% increase basically from year over year, meaning things are selling that much faster. Our sold price per square foot was up to $400. Our months of inventory, still 1.6 months worth of inventory. That's down 40.7% year over year. Remember, this number really needs to be about 6 months of inventory for a healthy market. Anything below 4 months is still a seller's market. So again, these are all our lagging indicators. When we're looking at our leading indicators, these numbers weren't as good as last month, but still our active listings, a little over 4,200 listings, right? That was down 44.7% year over year, but still about 136 a day. New listings, just over 3,900. That's still about 126 a day. But what we really want to look at is this 3,900 new listings, pending listings, what's going into escrow are 3,800. This is almost a 98% absorption rate in just a matter of 8 days. So that tells you that the market is still booming and going pretty strong. These numbers are all down because we just don't have the inventory. We don't have enough homes. If we had more homes to sell, you'd see these numbers wouldn't actually increase, again, with our with just the absorption rate, which is just key. And then our sold listings down a little over 9%. So anyway, that's in a nutshell. If you guys have questions about any of these numbers, if you'd like any of the back data on where I developed these slides, if you have questions about what your home is worth or what's going on in your neighborhood, I'm more than happy to have that conversation. Just reach out to me. And that's about it. Thanks so much for tuning in. And remember, who you choose to negotiate for you absolutely matters.